Lychuk, who is the Director of Macroeconomic Research at ICU Investment Bank. And from Washington, we have Anders Aslund, the veteran economist, commentator, senior analyst with the senior fellow with the Atlantic Council. So I understand the Minister Petrashko is with us, although I don't quite see or hear him. Maybe in his absence, Dimitro, why don't I start with you? Dimitro is a veteran board member, a governor of the national deputy governor. Here he is. Okay.
Hello.
Minister, greetings. Welcome. Thank you for joining. I've just introduced you. Your timing is perfect. We have 600 people around the Western world listening in, wanting to hear about Ukraine's macroeconomic situation. You're the Minister of Economy. Could you tell us what we should be expecting in 2021, next year?
Yeah, thank you. Thank you for the introduction, and thank you for such organizing such a great event. Obviously, we are having this in quite different situations. Normally, we would have it somewhere where all people can participate, but this also creates opportunities for many more people to join via internet and on video, and there are also some positive things into it. So thank you. Glad to participate in the fourth annual Ukrainian Investment Roadshow, and the event that dedicated to important discussions on the economic situations in Ukraine and Ukraine economic prospects to discuss for 2021. We'll be happy actually to share some of the key initiatives to stimulate economy growth and increase foreign direct investment that has been done already by the government, and the ideas and discussions that we plan to implement going forward. So what is the current situation with the economy? It is clear that our economy, like the world economy, has been greatly affected by the COVID-19 pandemic. The spread of COVID-19 has led to a decline in business and economic activity, as well as curtailment of production. Virtually all world economies has shown a sharp decline in GDP. To mitigate the impact of the COVID-19 pandemic, the government has taken a number of measures that continue to work and show the efficiency. Several of them. So there was actually access to funding. So the so-called 579 program has been broadened and implemented for many businesses, which allows businesses that struggle with payments to the banks to receive government subsidies and to pay effectively zero interest rate on their loans. And up till now, the program started working since July. It was before working, but with last amendments, and there is more than 15 billion hryvnias already current volume of the program. So the intention is the government and the president to continue the program into 2021. And also to broaden it according to the EU new regulations, which will allow us as well, Ukraine, to increase the compensation of the program from 200,000 to 800,000 euros. Reducing unemployment was second very important task which the government has faced. And obviously the unemployment rate has increased to more than 540,000 people, and now it's stabilized, and the unemployment rate is at 410,000 people. And as well, what is important that we introduced the so-called temporary unemployment program, which approximately 400,000 people didn't, compensation to weather them through this difficult time. So this also helped us to stabilize employment numbers. Different business support measures like the regulation, reduction of the tax burden on businesses, support continued to agricultural businesses, not as large as in European Union countries there, but still we maintain actually the support throughout the year. international treaties. We continue to be a reliable partner on trade, and we continue to guarantee a transit as well and a supply of Ukrainian agriculture produced to international markets, which was also important there because there were, as you recall, different voices to limit the trade and to fulfill the Ukrainian market for lower prices, but we managed actually to guarantee stability of the agricultural supplies and at the same time stability of Ukraine as a global trade partner. Continued large-scale privatization was a little bit slowed down at the beginning of the year for obvious reasons there. At the same time, all small privatization continued in quite a large amount. Government continues to pass new entities to state property fund for further privatization, and this is also very important. All these measures together with the easing of quarantine restrictions inside the country were the factors that allowed the economy to enter a phase of gradual recovery. Now just a few words about on statistic, why we feel like that. So in October, most economic activities showed an improvement in their dynamics. In particular, construction industry grew by 12.7% year on year and 1.9% 10 months to 10 months due to the active continuation as well of the great construction program. So this is important. Trade sector grew by 3.8%. 10 months to 10 months last year due to both the growth of the wholesale trade and the retail market segment. And while obviously certain sectors of the economy are showing growth, the overall situation still remains quite difficult. The largest decline is in the field of transport, a decline of 15.4%, 10 months to 10 months, against 15.6% for 9 months. So we do see a gradual improvement, but this improvement is not as fast as in other sectors. In general, following the results of 10 months as 2020, the reduction of GDP is approximately estimated at 5.2%, which is in line with the forecast trend which Ministry of Economy did at the beginning of the year. So there we do see a quite robust forecast capabilities there. And as you recall, we did this forecast back in March, April. And so far we more or less we are in line with those numbers. So despite a period of some uncertainty, a drastic easing of monetary conditions and visible devaluation of the Ukrainian hryvnia, the dynamic of consumer inflation due to the dominance of suppressed demand factors remain significantly lower than in recent years. So according to the results of 10 months, the consumer inflation rate was 2.7% and remained at a record low level for the realities of recent years. So given current trends, as well as the previously non-forecast introduction of weekend quarantine, which was actually introduced in December in response to growing numbers of new COVID cases, will be more likely the GDP will fall by 5% according to the results of the year. So instead of the previously expected 4.8. But this is still actually very close to predict. We still retain a possibility of the GDP to decline by 4.8%, which will depend on the final introduction of the lockdown or no introduction of lockdown and the stimulus packages which has been voted in the parliament on Friday, and the ability of the government to roll over this support before the year end. So if we implement those measures in timely manner, I think we will have a quite strong end of the year on macroeconomic basis. A separate factor of negative impact not related to the pandemic will be the downward trend in agriculture by the end of this year. So first of all, this is actually weather-based. Crop productions in conditions significantly lower than last year harvest of cereals and vegetables, fruits and oilseeds. This is unfavorable conditions for overwhelming of winter crops and variability of weather conditions in some regions during the vegetations and harvest seasons for other crops. At the same time, we do see a gradual rebound in the prices for agricultural products on global markets, which will mitigate the lower harvest numbers. The next issue is about Ukraine's macroeconomic forecast for 2021, obviously. And the 2021 forecast, namely GDP growth by 4.6%, was approved in July. Many actually said that this is quite high numbers to expect, since Ukraine hasn't grown 4.6% for many past years. But we believe those numbers are achievable and possible. And the current dynamics in the third and fourth quarter, with the proper management of the support initiatives, will allow us actually to maintain this forecast for 2021. So for the period after the approval of this forecast, there has been some change in the conditions, obviously, in the economy. In particular, the second wave of pandemic continues in the world and in Ukraine, and it is obvious that it will not end in 2020 as planned. This, in terms, obviously will affect the economic situation. However, given the launch of vaccination in the world, the condition of implementation of certain government measures to support business and the population, there is a strong likelihood of the economy returning to positive trends, which will be reflected in high positive GDP dynamics starting from the second quarter of 2021. Therefore, the forecast of 4.6% GDP growth, although tense, is quite probable. The negative effects of the pandemic are currently expected to be significantly less felt in early 2021 than in second quarter of 2020. Given the declining margin of safety of most economic activities and the depletion of the economy by constant fluctuations and changes in the terms of functioning during 2020, it is obvious that GDP may fall by 3% according to the results of the first quarter of 2021. But the adaptability and flexibility of certain economic activities enhanced by the different programs and the introduced during the peak of pandemic in Ukraine, which was from March to April 2020, as well as actually now, to work on the severe quarantine restrictions may in some way minimize this decline. So starting from April 2021, we expect an active recovery and positive growth dynamics. So fiscal and monetary stimulation of demand should be also noted about amongst the stimulating measures. Next year, the government proposes to adopt a budget with a deficit of 5.5%, which is currently in the parliament already, providing for an increase in the state social standards, which should support public demand, maintain significant funding for the great construction projects, and improve the country's defense capacity, which will stimulate investment demand. So we understand that the rapid recovery of demand amidst soft fiscal and monetary policy may lead to a certain acceleration of inflation in the short run. So currently, next year, consumer price index slightly exceed the NBU target and is 7.3% December to December. That's according to the macroeconomic forecast by Ministry of Economy. But this level is not too high for the purposes of restoring economic growth and improving the welfare of the population after a very difficult and extraordinary 2020. So furthermore, in order to implement the economic reforms provided for in the government program of activities, the following measures we planned in December and in 2021. So expansion of business support program, 579 portfolio guarantees, which has been voted by the government last 2 weeks, 2 weeks ago. Special assistance in conditions of strict quarantine. This is actually the programs which are being introduced right now, and which, if successful, will be able actually to roll over for future needs as necessary. Continuation of the regulation tools for business, and we intend to speed up this process now as the once the COVID intensity will decline. support of national producers, localization criteria, non-price criteria to continue to be developed, and we need to find a way to provide stimulus for businesses to produce in Ukraine, as we call it, not by Ukrainian, but produce in Ukraine, and that's what all countries do, and that's our still goal. And we do see already positive effect, even from the messages that are given. So there are many producers which now review possibility to start production of goods that they previously imported to Ukraine. Implementation of the government strategy for reforming the railway industry and modernizing rail cars. This also not easy task as well. There are lots of pressure not to do that and to retain status quo. But again, we are committed to modernization of Ukrainian economy. And this is something which had to be done in the last 30 years and never has been done. And we are sure that we will push forward this major reform that will stimulate as well businesses around the Ukrzaliznytsia and will be very positive for the general GDP. Reduction of barriers for Ukrainian exports and liberalization of exports access to markets. Expansion of the terms of trade cooperation with EU in the framework of the updated provisions of the association agreement. As you know, 5 years ago, the EU-Ukraine association agreement has been signed, and 5-year period has ended. After 5-year period, there is a possibility for us to start discussing updates for different goods and services, and that's what we have started already together with EU, and we intend this to continue in the 2021, which should provide positive results for Ukrainian producers as well. Start of large-scale privatization, 2021 after COVID. This would be the time to finalize the privatization efforts, and expansion, obviously, of the agricultural support, for which Ukraine, the agricultural industry has important role for Ukrainian economy. President, government introduced new ways to support agricultural producers that hasn't been available before. That includes the development of the insurance market to support agricultural producers against different weather conditions, and that's very important. Such programs are in European Union, in United States, and the only country which such significant presence in the agricultural trade market as Ukraine that doesn't have it is Ukraine. So this is something which we intend to roll out at the beginning of next year. So this product becomes available to agricultural farmers. It will not be obviously available for all agricultural farmers, and we need to learn to gain trust of agricultural farms and producers. But we hope that we will gain this trust, and the situations like this year with droughts negatively affecting farmers, and for them not having been able to get some adequate support will not be present in the future. Irrigation as well. There will be emphasis done on irrigation in 2021 and going forward. So Ukraine has great potential, growing irrigation areas from a little over 400,000 hectares to 2 million in several years. And this year we intend actually to jumpstart access to new programs, financing, and structures. And obviously launch of the agricultural land market. So agricultural land market would be an important step. Now it seems that it's not on the agenda, but it is on the agenda. So we are working actually on the supplemental legislation together with the parliament. And we are confident that we will be able to implement the remaining legislation for this market to open in a scheduled time frame from the 1st of July 2021. Few words actually, because I understand I took like quite a lot of time. So a few words on several government initiatives to increase foreign direct investments. First, we'll focus on private-public partnership, PPP. In this area, the legislation was improved, and the first transparent concession standards were held for the ports of Olvia and Kherson. Olvia and Kherson, yes. And in addition, the government has approved a list of priority investment projects for the state until 2023, of which 40% are large-scale projects in the field of infrastructure and transport. These projects are all available through Ukraine Invest platforms, which updates it on a quarterly basis. So now it's not a brochure, it's actually all available online. And this is a great also marketing tool as well. And priority investment projects cover almost all sectors of transport. In particular, the list includes the construction of the new airport in Zakarpattia and the reconstruction of 13 more regional airports. Because transportation and airports are very important actually in the business developments. Industrial parks are also one of the promising tools for attracting investments. Today, the register of industrial parks includes 43 industrial parks. There are several also legislative initiatives developed in the parliament, which should improve access of businesses to such facilities. In addition, for the purpose of stimulating investment in the Ukrainian economy, President Zelensky submitted a draft law on Ukraine on state support of investment projects with significant investments, so-called investment nannies. And although it took much longer time in the parliament to pass, we are confident that this tool will be available very soon for the government to start working with investors. And Ukraine Invest, I know, already is working with investors who want to actually, once the law will be voted, to get access to what it offers. Ukraine is obviously in extremely competitive global environment, and at the same time, Ukraine remains attractive for investment. The readiness of the government and the office of the president to support investment activities is also important signal for both foreign and domestic investors. In the medium and long term, Ukraine will continue to move towards integration into the European economic system, and this is actually something that we strongly believe that this is our future for Ukraine. And to do it, we obviously must use the opportunities that are created during the transformation of global economic systems. And I would like to obviously invite all investors which are currently actually joined the call to explore further the opportunities that the country currently presents. We are changing the economic system in Ukraine quite rapidly. We have a coherent, transparent, and well thought approach to COVID response there. And as we are as well a reliable international partner, which Ukraine obviously sees itself as the member of the European Union and community in terms of the market, and close integration with United States, Great Britain, and Canada as well in advancing the interest of the free democratic society.
Yeah, Minister, thank you very much. And you gave a great overview because you really have three portfolios: trade, agriculture, and economy. So you have a great overview. And to sum it up, I think you're really predicting a U-shaped recovery. There's some investment houses in town, and our next speaker is from one of them, which have been predicting a GDP drop maybe of only about 4.5%. So if the GDP bounces back in 2021, we will be having a U-shaped recovery, which would be good news. Well, thank you very much for that. I know you've got to run off, but I think since I mentioned ICU, maybe I'll move on to Sergey Nikolaichuk, head of macroeconomics at the ICU Investment House. And Sergey has some interesting graphs which will sort of put in a visual way what the minister has just been explaining to us. So once again, thank you, Mr. Minister, for your presentation.
Thank you, and sorry for not being able actually to be till the end there, but obviously we'll have the feedback from the people who will speak later, and I would definitely read, and we'll get back if there are some questions.
Great, thank you. Bye-bye. So, Serhii, if we could go to you and your presentation, that'd be great.
Hello, everyone, and first of all, I would like to thank the organizers for invitation and for providing me this chance to share my thoughts on the macroeconomic outlook in Ukraine. This year's roller coaster for the Ukrainian economy keeps going, and after a lockdown-induced sharp decline in the second quarter, the economy showed a rapid recovery in the third quarter, exceeding the expectations of most economic forecasters. However, further growth momentum slowed in the autumn amid the new coronavirus outbreak, and at the same time, the positive news about vaccines has given a new hope that next year new waves of COVID-19 spread and severe lockdowns will be avoided, and the economy will get a new impetus for the return to the pre-pandemic trajectory. So we improve our GDP estimate for 2020, and now we see it in line with the Ministry of Economy estimate, minus 4.8%. And we reiterate our quite optimistic view for 2021 growth, plus 5.6%, and that is actually even higher compared with the government forecast. And that is much better compared with many peers and Ukrainian own experience during the previous crisis episodes. So the question arises, what is behind such optimism? So in addition to the standard catch-up growth, which I suppose many countries in the world will experience next year, I would like to highlight here the facts why we believe, as before, that the Ukrainian economy is much better prepared for this crisis compared with its previous crisis episodes. First, thanks to its structure, with a high share of agri-products and IT services, IT outsourcing services. And second, due to the strengthening of macro-financial stability after the crisis of 2014-15. Sure, from our point of view, the results in 2020 could be much better if the authorities fully took advantage of available opportunities to attract official funding and provide the economy with stronger fiscal and monetary stimulus. Unfortunately, our previous expectations of the second tranche of the IMF coming not earlier than next year were confirmed. I will not count here the list of problematic issues. Everybody knows them very well, starting from the NBU independence issue and finishing with the recent decisions of the Constitutional Court. And actually, this situation, is a quite good illustration of the words you may hear quite often about Ukraine, that the country has never lost the opportunity to lose the opportunity. However, there is the other side of the coin in this story from our point of view. Despite all obstacles, or maybe thanks to them, macroeconomic management in the country has remained extremely orthodox and prudent. And macrofinancial stability has not been jeopardized. Even more, external accounts, for example, look surprisingly strong. Current account runs surplus of almost 4% of GDP this year. Reserves are even higher than at the start of the year. Inflation is low. Banks are in quite good shape. And public finances metrics deteriorated only marginally. From my point of view, all that creates the right preconditions for the strong rebound if the authorities will be able to turn on the gear for the economy. And let's look at some details about that. As I said before, actually, the macro-financial stability was not jeopardized, and although the banks increased their holdings of hryvnia bonds, government bonds, by significant 46% in the first 11 months of 2020, in particular exploiting the NBU refinancing loans and accumulated liquidity in certificates of deposits. So fears of large-scale monetary financing of the budget deficit have not materialized. Both the NBU and the banking system, so commercial banks, have behaved rather conservatively. And given the limited funding from other sources, 2020 budget deficit will amount approximately to 5% of GDP, well below the planned and the corresponding level in other countries. Actually, the minister pointed out to some stimulus implemented in order to support the Ukrainian businesses during the pandemic. But frankly speaking, when we accounted for all tax exempts and all programs of the support of unemployed, including the partial unemployment or furlough schemes, Ukrainian furlough schemes here. So we come up with just 0.5% of GDP amount, so which is completely teeny amount compared with other countries. So you may see from this plot that Ukrainian current account, Ukrainian fiscal deficit of 5% is one of the lowest compared with peers. And fiscal impulse, when we compare the change of the fiscal deficit compared with the previous year, just 3% of GDP was really very, very low. So in 2021, if budget constraints are eased through the resumption of official funding, and the increased opportunities for borrowing in the domestic and financial and international capital markets, the budget deficit as a percent of GDP will hardly change. It means that the structural balance adjusted for the business cycle will decrease sizably, indicating quite strong fiscal impulse. And this impulse will be complemented by the monetary easing. First, inflationary pressures are growing very slowly in Ukraine, and we expect that in 2021, despite a sharp increase in the minimum wage, inflation will fluctuate close to the upper limit of the target range, 6%. Although the economy will actively recover starting from the second quarter, the global low inflation environment and some strengthening of the exchange rate due to improved external accounts will be important headwinds for the inflation. Second, global interest rates will remain quite low at least next year. And finally, the resumption of official funding should reduce medium-term risk for external sustainability and financial stability, and therefore the NBU will have arguments to delay the first interest hike in the new cycle until July, and we expect the rate to be raised by only 100 basic points to 7%, compared with 7.5% envisaged in October NBU forecast. As a result, you may see from this chart that on average real interest rate, the difference between nominal rate and inflation will be much lower next year compared with this year. So based on cyclical fundamentals, on the macroeconomic performance, Ukrainian economy is well prepared for the strong rebound. But of course, to launch it, we need not only vaccines in place, but policy actions to unlock needed financing and simultaneously improve the basis for sustainable growth in the long run. The recent authorities' efforts to resolve these issues and their willingness to cooperate actively with Western partners were encouraging. So that makes us to believe that this opportunity finally will not be lost. Thank you very much for your attention. James, sorry, you are unmuted. You have to unmute. James, sorry, we do not hear you. You are muted.
Thank you very much for that, Sergey. Very useful. And your final graph on the interest rates segs straight to Dmytro Sologub, governor of the National Bank of Ukraine. And we're looking at that tiny little margin between interest rates and inflation rates next year. Dmytro, we're interested in your view for 2021, how things are looking to you.
Yes, thank you, James. Hello, everybody. I mean, first of all, the important disclaimer, actually, one thing I would not be telling today is interest rates, because we are now in the blackout period prior to our monetary policy meeting on Thursday. But I mean, I think I just like to briefly share our views where we see economy right now, where it's going forward. A lot has been said already, and I don't think there is a need to repeat. It's pretty clear that Ukraine is having a good crisis so far, not maybe compared, you know, to the global economy. There we are not kind of probably the best, but not the worst either, which was actually the case for Ukraine back in 2008 and 2014 with pretty devastating crisis. And I think the reasons for that, we basically see three reasons. First is that macro policies in 2015, 2019 did make a difference. That's pretty clear. Economy came to this crisis much more resilient than before in terms of external vulnerabilities, financial sector, fiscal sector, and so on. And that actually helped central bank and the authorities, the government, to design a proper and launch proper counter-cyclical policy response, monetary policy easing, fiscal policy easing, and so on. So that's the first reason. And actually, interestingly, I would say ironically, all three reasons why Ukraine is having a good crisis so far actually have been much criticized. The first one, yes, there have been a lot of criticism of central bank policies in the last 5 years, and I hope now people see that this policy is actually bearing the fruit in terms of tight regulations in the banking industry, in terms of quite tight monetary policy to bring inflation down, and so on. The second reason why Ukraine is having a good crisis so far was actually mentioned by Sergey already. It's actually our external trade structure. Ukraine is a small open economy, and I think the structure of our trade this year has been quite beneficial, because we did benefit from the significant monetary and fiscal easing around the world, which propped up our export prices. And on the other side, we have seen a meaningful decline in our import prices. There have been a lot of criticism on the Ukraine, economy structure and trade structure in the last 5 years. Oh, it's not so sophisticated, it's not high value added. Yes, it's right. But in the current crisis, where service-based economies and economies with a lot of with industries and sectors with high value added, they suffered most. And Ukraine, yes, kind of lived through pretty unscathed with this, helped by China recovery, helped by global monetary and fiscal easing. And the third reason is a cooperation with foreign donors. Again, there have been a lot of criticism on that, on external management and so on. But contrary to a lot of other emerging markets, Ukraine came to this crisis having in the back already a quite, yes, rocky, but strong relationship with foreign institutions, like, first of all, IMF, World Bank, and it helped to engineer a significant support package pretty quickly. Because as we all know, a lot of emerging markets which graduated from IMF a lot of years ago and now got into the big trouble, they had to, came to IMF in pretty hectic way, and IMF had to design this special program. So in case of Ukraine, as Ukraine has been on the radar of the fund and the bank for quite a long time, we were able to, to secure a quite large-scale financing pretty quickly. But I mean, yes, that actually helped Ukraine to have a good crisis so far. No banks have been falling. Macro looks pretty similar to a lot of other countries. I would say even Ukraine is standing out in terms of retail sector growth. In the third quarter, Ukraine had one of the fastest retail turnover growth around the world. To me, the reason for that is somehow, the backside of pandemic, that we have seen a quite strong sentiment in Ukraine, consumer sentiment in the third quarter, which propped up retail trade. And that probably contributed to a quite strong rise into the infection numbers we have seen in the third quarter. Inflation remains low, as it has been mentioned by the minister. We do expect inflation to be in our target range for this year. So indeed, I mean, and the current account is in surplus, which was mentioned by Sergey. So indeed, I mean, at the moment, Ukraine looks quite good. On the other side, if you look at Ukraine, sovereign spreads and ratings, it still remained pretty depressed. And I think the reason for that, that Ukraine has this quite difficult legacy, and a lot of people, I believe we have a lot of, experienced Ukraine watchers now watching us. And I believe a lot of them have some painful memories of investing into Ukraine. And they do appreciate that Ukraine improved and doing so far quite well during this crisis, but they're not sure that would be like that. If I look actually at the B rating basket and look at Ukraine compared to peers, I think Ukraine macro is basically looks better than most of the peers. But perception still remains difficult. And that also reflects the fact that there are these fiscal woes at the moment now, because indeed the country has been able to have a proper counter-cyclical fiscal response. But to a large extent, this response was propped up by this long-term cheap official financing. And as we all know, out of $6 billion which were supposed to arrive this year and put for budget financing, the outturn is only 2.7 billion, which creates a financing gap. In the budget for this year. The fiscal picture in general still looks to me is pretty okay, but I do believe, and I think that we have been reiterating a lot of times in the central bank, that the cooperation with the foreign donors is a very important, part of the macroeconomic picture in Ukraine, for several reasons. We used to say before this crisis that Ukraine is not requiring money from the foreign donors anymore because situation improved. But now during the crisis, it is requiring the money. But apart from that, it's pretty clear that the signaling, role of IMF and other donors under current circumstances is even increasing. Yeah, because as I said about this perception of Ukraine, so the cooperation with IMF and other donors is actually extremely important. Yes, economy is much more robust and resilient as it used to be, but it's still not out of the woods. I mean, regarding how we in the central bank see the economy going forward and what would be our policy, as we said, we have been able to help economy this year by substantially relaxing monetary conditions, by improving again substantially the access of the banking system to our liquidity instruments and so on, and we see it's working. We are having actually our interest rate below the neutral level right now. Therefore, we see our monetary policy stimulating, as easy monetary policy, and going forward, we would very much. Our policy would be very much based on the inflation performance and the macroeconomic performance in general. We do see some acceleration of inflation next year as the economy would recover from a huge shock and would recover pretty quickly, as we expected, to the range of 4 to 5% growth next year. And that would naturally bring some inflation acceleration. It might overshoot at some stage our targeted range, but again, based on the stable macroeconomic policy and especially based on some tightening from the central bank, we do expect inflation eventually to return to the target at some stage in 21-22. So in general, I mean, macroeconomic picture for Ukraine in the baseline scenario looks pretty okay. but there are still some tail risks, and these tail risks, apart from this pandemic situation, which we honestly could not really project, but as everybody, we now hope that this vaccination would make a difference. Apart from that, most of the risks are basically a kind of policy on the policy side.
Good, Dmytro, thank you.
I'll stop here.
Thank you for that, and I like your phrase, the good crisis. Something sort of counterintuitive, but living here, everyone was waving their hands in the air that the airplanes weren't flying, but Ukraine is an exporter of tourist dollars. So by bottling up all these people who would be traveling, they end up spending here, and retail sales are up 10%. There's a lot more money being injected locally into the economy. And at the end of the day, people are going to eat. And so Ukraine is one of the top 5 exporters of grains. So that's a really great position to be in. And on the bonds, let's see what happens. I believe next week there will be a Eurobond issuance. And, what's the competition? You buy a Eurobond, borrow money from the European Central Bank, it's negative interest rates. The US Treasuries are half of 1% or something pathetic. Ukraine will be offering 5-year bonds, 6-7%. So I think people can look beyond the noise and see the opportunities, and there's real hunger for yields out there. Now, Anders, you'll probably contradict me in the next 30 seconds. But from Washington, live and direct, we have Anders who will give us a reality check. So Anders, tell us what you think.
Yeah, thank you. The theme today is the macroeconomic outlook, and so far the 3 previous speakers have stuck very much to this, and I have very little to object, hardly anything to what Igor, Sergei, and Dmytro have said on this. So I'll just emphasize a couple of main points. Ukraine has a decline in output this year of about 5%, which is about half of what we are seeing in Western Europe. It has an astounding, as Sergei pointed out, current account surplus of almost 4% of GDP, but it normally has a deficit of 3% of GDP. So this is a big improvement. Both these are, as Sergei pointed out, structured. It's because the iron ore and food prices on international markets have been very good. And Ukraine is a big exporter, so the terms of trade have greatly improved. And as everybody has said, Ukraine has a small personal service and tourism sector, as you just said, Jim. So these are the positives. And also, as Dmytro emphasized, Ukraine has very conservative public finances, and that has not had a negative impact on overall growth. So I would like to focus on what has not been said, the negative indicators, and I would lift 3 indicators that have not been mentioned. One is amazingly exchange rate. Dmytro talked about it, but the exchange rate has fallen in relation to the dollar by 20% this year, which is a big depreciation. And this is a reason why people, somebody mentioned, I think you, Jim, that people are not very prepared to go into Ukrainian domestic bonds any longer. And we have seen a big investment in that. There is no credibility in the Ukrainian exchange rate since the president in March said that he wants to have an exchange rate at the end of the year that is 30 hryvnia per dollar. And now it's 28.6 hryvnia per dollar. So this is the president who has imposed this expectation that there will be an exchange rate depreciation, which is serious if you are an investor in hryvnia papers, as many have been, much fewer now. A second negative point is that foreign direct investment during the first 10 months this year have been only $200 million. That's 0.2% of GDP. Normally, Ukraine has a 3 to 4% of GDP in foreign direct investment. And why is that? Well, it is because Ukraine does not have good property rights. It really doesn't have any property rights. And here I come to the third negative indicator, which you had last Thursday in your excellent Ukrainian business news, Jim, that corporate rating during the first 9 months of this year have been 751 enterprises, more than during the whole of 2019. So it's not only that property rights are poor, they are even deteriorating. This is the serious concern. And then I jump to what the IMF, the concerns that the IMF has. And you can say that there are 4 concerns that the IMF has. First, it is the independence of a national bank, where possibly the IMF has been satisfied, but with the ouster of most of the old, the excellent team, of which only 2, that is Dmitry Sologub and Katerina Roshkova, remain. The IMF does not really trust the national bank. Perhaps sufficiently, but that's a touch and go. The second issue, which is much more serious, is that the anti-corruption framework has essentially been broken down by the Constitutional Court, which is quite blatantly voting for as much corruption as possible. And since the Constitutional Court, with 11 out of now 15 judges, is trying to destroy the whole anti-corruption framework that has been key for all the Western institutions, it's very difficult to see what can be done about it. And that's the biggest question. And then the third issue, which probably the IMF will push for the future, is judicial reform, which is going nowhere. And here, what the president can control is the prosecutor general, Irina Benediktova, who is quite blatantly, just like the Constitutional Court, opting for maximum corruption and not going after any of the serious people. And that leaves the IMF with a question, does anybody here actually want reform? And now I'm not talking about people like Dmitry, but really the top of a presidential office. Do they want reform? And the IMF can't see that. And then is the question, is the situation so bad so that Ukraine needs money, even if it doesn't quite reform, as the IMF provided Ukraine with money in 2014, just to keep it going? I don't think that that is a major concern now, with reserves very solid around $25 billion. So my expectation is that the IMF will say this is not good enough. Give us an anti-corruption framework that we can believe in. Otherwise, we think that you can go to the market, as you pointed out, Jim, that Ukraine is doing now. And of course, Ukraine has to pay higher yields, because there is no credibility in the exchange rate, and there's no credibility in property rights, even if that does not influence Eurobonds directly. So then it doesn't help that the macroeconomic policies, as all the 3 previous speakers rightly pointed out, are very strong. Thank you.
Yeah, Anders, thanks for that. You've witnessed many, history is littered with failed IMF programs with Ukraine. If you were a betting man, first quarter, second quarter, do you think we will see the IMF program back on track?
I don't think that it will be back on track until there is a fundamental change in policy. So it's not a matter of time, as all the investment banks say, will it be this quarter or next? It's a question of whether there is a complete change in policy. And the only hope I see here is President Biden. President Biden knows Ukraine very well, and he's strongly committed to Ukraine's sovereignty and tough love in order to fight corruption. So Biden is the last hope Ukraine has for the next few years.
I also agree with you. but you're in Washington. What indications do you see that Biden will delegate someone to assume the role that he played during the Poroshenko government?
That I don't know, but Antony Blinken, who's nominated as Secretary of State, knows Ukraine very well, since I think he was with Biden on all his 6 visits to Ukraine. And Michael Carpenter is the next step. So I think that Michael Carpenter will become the top person responsible for Ukraine day to day, regardless of what job he will get, probably a senior post in the State Department.
Good, interesting. Dimitro, do you have any response to what Anders was saying, that it's going to take a lot of work for the Ukrainian government to get back on track to persuade the IMF?
Well, I mean, there would be in March next year, 6 years, I'm in the central bank, and that's not the first time we see delay in negotiations with IMF. And I mean, if you look at the current program, basically it's not so heavy on the conditionality. I think very much the sense of this program was to build up on the things which were done already, like developing modern, professional and independent central bank, developing anti-corruption infrastructure and making it work, and so on. And then ensuring going forward that fiscal policy is prudent and so on and so forth. So, but on the other side, as we have seen some backtracking on the issues which were very much backbones of Ukraine of IMF negotiations, it's pretty clear that we are now very much IMF needs time to reassess, because the philosophy of this program very much changed, and therefore they needed time to reassess where we are regarding the backbones of this program. How much time it would take, I mean, I don't know. Yes, as I said, the sooner the better, because we are now living through the second wave of pandemic, and the country still requires a quite substantial, fiscal support. The budget deficit initially was planned at 7.5% of GDP, as I already mentioned, very much propped up by access to cheap official borrowing. We still don't know. I mean, we have still 3 weeks until the end of the year, and but our estimation in the NBU that the budget deficit would be actually much lower, somewhere in the range of 5 to 6% of GDP, maybe even a little bit lower. And the reason for that is actually this financing gap. So as we understand, despite all this good news on vaccination and so on, the pandemic is not over yet, and the economy would still require support. And to base this support on access to cheap official financing is basically the wisest thing to do. Therefore, from the policy side, I would just reiterate that it's important to secure a resumption of IMF program as soon as possible.
Yeah, I agree with you. Serhii, you also are here in Kyiv. What's your view on the IMF? And Anders brought up the need for a sincere effort to reform coming from the top. Do you think that's going to happen, or do you think that Ukraine is geopolitically so important that the IMF will sort of muddle through and give them a pass?
Thank you very much for this question. Coming back to June, when Ukraine got the first tranche, so our expectations were that the next tranche will come not earlier than next year, because even despite this low conditionality, Dmytro already mentioned, so this there were a lot of risks about the backtracking of reforms and so on. And for Ukraine, it's quite a usual story to get one, probably maximum 2 tranches per year at the time. But during the last 5-6 years, all the time we were in the negotiations on the program, on the next IMF tranche. And nowadays, I'm a little bit more optimistic than I was approximately a month, 2 months ago. Yeah. Again, what has changed actually? So from my point of view, this the second wave of pandemic. Yeah. So this program. So it was designed to support the Ukrainian economy during the pandemic time. So definitely it's more natural, to provide money in time when country needs to spend them for support of healthcare system and so on, to support the economy in the current conditions. And IMF management talks a lot about that. Yeah, so you may note that some change in the paradigm of the IMF policies. Yeah, Ms. Georgieva focuses a lot on the need for countries to spend nowadays. So definitely it's natural for IMF to support the countries like Ukraine in the current situation. And the second, that is actually the win of John Biden on presidential elections. So from my point of view, the attitude of the Western partners will be a little bit different nowadays. So on the one hand, as Anders mentioned, so the policy will be probably more tough in terms of requirement, stronger structural reforms in Ukraine. But at the same time, my suggestion that the Western partners will be more inclined to provide the needed official financing. And nowadays, many people try to compare the situation, the current situation in Ukraine and the situation in 2011, 2013, when Ukraine played these dances with the IMF for a long time. But probably there was important lesson from that time, that for the Western partners, so skipping Ukraine from the cheap official financing may actually lead to completely opposite results. So combining all this information, and again looking at some encouraging efforts of the Ukrainian authorities to renew the program, so I'm more optimistic now. So probably we may expect progress in the negotiations in the nearest future.
It's great to be optimistic on what's almost the shortest day of the year. We need a little sunshine. Anders, your hand's up in the air.
Yeah, thank you. I wanted to respond to what Sergei said. It's a very important point he mentioned, that the IMF now has a new leadership. And indeed, Kristalina Georgieva sounds very different from the previous leadership. And for Ukraine, it's more important, I would say, that she has changed number two. Previously, she had very experienced David Lipton as number two, who was very much the IMF real mission chief for Ukraine. Now he's no longer there. The new first deputy is quite inexperienced and has no particular sense of Ukraine. So this means that we have a considerable uncertainty about what the IMF actually does. And it's right, also what you said, Nikolai, Sergei, that she talks very different. She speaks about spending money, and she essentially speaks about three themes, and it's development, poverty, and women. So it sounds as if she hasn't realized that she has moved across the road from the World Bank to the IMF, and that the IMF is actually doing macroeconomics. She doesn't say a word about macroeconomics apart from spending, as you said. But then we come to the contradiction. The IMF this year has given surprisingly little money. Apart from the Ukrainian standby program, it has only produced one standby program, if I have got it right, for Egypt. And then it has had 76 tiny programs for rapid financing for very poor countries. So the IMF is not getting the money out of the door. 6 countries have defaulted so far this year, and the IMF is not present. So there is a question about the efficacy of the IMF under the new leadership? And this is just an open question. I have no answer as yet, but this is what I'm also looking at.
Mm-hmm. Very interesting, Anders. That's very interesting. 6 defaults and no IMF help. Well, gentlemen, thank you very much for your insight here. There are a couple of quick takeaways. One is, I think we all agree there may be, if not a V-shaped recovery, a U-shaped recovery in 2021, and the chances are fairly good that this time next year we will see Ukraine back to where it was, the start of this year, which is 2 years ago then. And Dimitri, I love your good crisis phrase, which is sort of lugubrious, but we have seen that. Food sells, people are not traveling, so they're spending money here. The doom and gloom of a 6-7% drop. And Sergey, maybe it was you who mentioned that the neighbors are down 10% and we may be down 5%. So that looks pretty good. So as usual, there are pluses and minuses, but thank you. And with luck, next week, December 15th, I may be doing a one-on-one interview with a Washington figure who is very much tied into Ukraine and could be talking about the Biden outreach to Ukraine in 2021. And I agree with you, Anders, that I hate to say it, but on the reform front, I think Biden and his tough love are, if not the last hope, the best hope to get things back on track here. So once again, I want to thank all 3 of you. And Dimitro, thank you, over at the central bank. Anders over in Washington, and Sergey 4 blocks down the street. So once again, goodbye, good afternoon, and thanks for your help. All the best.
Thank you.
Bye.
Bye-bye.
Thank you. Bye-bye.